So has it ever crossed your mind what to do if the cryptocurrency market suddenly crashes and you see your investment disappearing on the screen? If that worries you, you're not alone. Many beginner and intermediate investors enter the world of cryptocurrencies without knowing how to protect themselves against sudden drops, high fees, or impulsive decisions during crises. But here's the good news. In this video, I'm going to teach you practical strategies, like diversifying your investments, using hedging tools like stablecoins, and staying calm when everyone around you is panicking. Want peace of mind even during the toughest market turbulence? Then stay tuned until the end. If you're between 20 and 40 years old, just starting out, or have been investing for a while but still feel that knot in your stomach with market fluctuations, this video is for you. By the end, you'll know exactly how to protect your assets and avoid common mistakes that cost dearly. Let's work together to turn fear into confidence and ensure your investments are always safe, no matter what happens out there. To better understand why extreme volatility scares so many investors, we need to look at what causes these big swings in the market. Events like mass sell-offs, negative news, market manipulation, and global economic crises can cause cryptocurrency prices to plummet quickly. For example, remember the collapse of Terra Luna or the FTX bankruptcy. In both cases, investors watched their portfolios lose value within hours. The problem is that many novice investors aren't prepared to handle these situations. When they see the market dropping, they panic and make impulsive decisions, like selling everything at the worst possible moment. This not only amplifies losses, but also takes away the chance to recover their money when the market stabilizes. Have you ever wondered how some investors manage to come out unscathed from these crises while others lose everything? One of the most important strategies to protect your assets is diversification. Diversifying means not putting all your eggs in one basket. Instead of investing all your money in Bitcoin, for example, you can spread your capital across different asset classes, such as Ethereum, stablecoins, and even traditional stocks. This reduces the impact of specific drops in a single asset. Imagine having 50% of your portfolio in Bitcoin, 30% in stablecoins, and 20% in stocks. If Bitcoin drops by 30%, your stablecoins and stocks will remain stable, protecting part of your capital. This approach not only reduces risks, but also increases your chances of profiting in different market scenarios. A real-life example of this was during the 2022 crisis, when many investors who diversified their portfolios managed to minimize their losses, while others who bet everything on a single cryptocurrency lost almost everything. Another powerful strategy is the use of hedging tools, like stablecoins. Stablecoins are cryptocurrencies pegged to stable currencies, such as the US dollar. They act as a safe haven during crises because they maintain their value even when the market is falling. For example, imagine you notice signs of a potential market drop, such as negative news or large sell-off movements. In that case, you can convert part of your Bitcoin or Ethereum holdings into stablecoins like USDT or USDC. If the market falls by 30%, you'll be protected because your stablecoins won't lose value. Additionally, there are other hedging tools, like futures contracts and low-risk ETFs, but these are more suitable for advanced investors. For beginners, stablecoins are a simple and effective option. However, it's important to remember that even stablecoins carry risks, especially if issued by unreliable companies. Always research before choosing where to invest. But technical strategies alone aren't enough. The biggest challenge for many investors is avoiding impulsive decisions during crises. Panic is one of the biggest enemies of any investor. When the market drops, it's common to feel fear and want to sell everything to avoid further losses. However, this reaction can be extremely harmful. A classic example of this was during the Bitcoin crash in 2018, when many investors sold their positions at the worst moment and missed the chance to recover their losses when the market rebounded. To avoid this, it's crucial to have a clear investment plan before entering the market. Set goals, limit your losses using tools like stop-loss orders, and above all, maintain a long-term mindset. Remember, the market always recovers, but your patience is the key to taking advantage of that recovery. By applying these strategies, diversification, the use of hedging tools, and emotional control, you not only protect your assets, but also gain something even more valuable: peace of mind. Knowing that you're prepared to face any market turbulence is the greatest gift you can give yourself as an investor. With these tools in hand, you can sleep soundly knowing your investments are safe, even during the most chaotic moments. Remember, success in investing isn't about avoiding crises, but about being prepared to face them. Now that you know these practical strategies, are you ready to turn fear into confidence and build a solid foundation for the future? If you like these strategies, give this video a thumbs up and share it with other investors who need this help. Subscribe to the channel for more content on smart finance and investments. Remember, the market always recovers, but your patience is the key to taking advantage of that recovery. Are you ready to turn fear into confidence? See you in the next video.